Scott actually is very well known for his work in crowdfunding in Washington, D.C., and he launched his company in San Francisco. He'll talk about in a second, Arctic Island, but he lives here right in Las Vegas. And he moved here about a year and a half ago or so?
No, I moved here 4 years ago.
4 years ago, okay. And
I like the restaurants.
and
the taxes.
He also started out spent a large part of his tech career in that state to the west of us that has a lot of taxes. And Scott, it was on the bio on the site for those of you who didn't read, has raised over $100 million from the traditional VCs, had a few exits, also lived through barely the .com crash, sort of invented what became like sort of what iTunes does today. Yep. And he's a real software pioneer, and also one of the unique people who has both a track record in financial services, running big financial services companies, as well as innovative software companies. And so, Scott, tell us a little bit about your vision for Arctic Island and the Fund America aspect.
Well, can I go into a little bit of history?
Absolutely.
First, everybody hears the buzzwords about crowdfunding, but let me just set the tone. I mean, he kind of established my credibility in the world of crowdfunding and all the security stuff. I'm one of the guys. I wrote the best practices for the industry. The SEC has adopted a number of things that I've told them to do, basically, and I'm very active working on all industry levels. But what I'm going to talk about, particularly what we're doing, is securities-based crowdfunding, raising money for your companies by giving away equity or debt. But let me just go a little bit farther back and give you a little bit of history. Let me talk about Wall Street for 1 second. How many people here are finance majors? Okay. All right, for you guys, you probably studied this. The rest of you, you're going to get a chuckle out of this. Wall Street in the 1600s was a Dutch place that was the street that ends in a wall, and it ended down at the wharf. And that was a place where they would trade slaves, and where the pirate ships would come and they would sell shares in the voyages so that they could get money to outfit the ships, hire a crew, and do the things that even criminals, that weren't criminals then, but needed to do. So they had to get their stake, and they would sell shares and trade shares in the pirate ships and then in all the slave market. That being the foundation of Wall Street, you can understand it's not exactly solid for regulation and compliance. Jump forward to, I'm not going to go over the crash, the 1879 and 1909, but of course we're all familiar with 1929 and the stock market crash. And after that, the country was going into the Great Depression. Congress passed the Securities Act of 1933, and that was like, holy shit, we have this unregulated, free-for-all market that is operating under principles that a group of guys got together under a buttonwood tree and decided, oh, let's have some rules as to how we're going to trade shares. And the stock prices were overly inflated, and then, of course, they got crushed, and it ruined the financial markets of this country. So they passed the Securities Act of 1933, which created the Securities and Exchange Commission. They then said, okay, we got this legislation. Who are we going to get to run it? They did then what the NSA and the CIA do now. What happens when the FBI catches a really elite hacker? Does he spend any time in jail? Of course not. He gets hired. It's like, oh, that was your job interview. They did the same thing then. So they went to the guy who made the most profits out of abusing the market in the stock market crash. The guy who literally became obscenely wealthy. He started making money in the bootlegging. Okay? He was bringing in booze from Canada and selling it during Prohibition. And then when the stock market crashed, he shorted stocks on the way down. He did all kinds of financial manipulations that made his family the fortunes that exist today, and they chase women all over the country and they do some politics. His name was Joe Kennedy. Mm-hmm. And so Joe, they said, you know what? Put in rules to keep people from doing what you did. And so he did. He wrote all the rules and regulations. Then in 1934, They had Securities Act of 34, and that created what's called SROs, self-regulatory organizations. A lot of people know as formerly as the National Association of Securities Dealers, which in 2007 merged with the enforcement arm of the New York Stock Exchange and became FINRA. But that is the regulatory association that all the brokers, all the broker-dealers in this country belong to. Now, since 1934, 80 years, no new securities legislation, nothing that affected the financial markets until last year and the Jobs Act. Jumpstart our business startups. The Jobs Act said, you know, we have this thing called the internet. We have social networks. We need to modify this. There's a lot of pressure from existing groups. The Wall Street is really run by a small group of people who enjoy basically a monopoly position. And for some reason they didn't want to change things. But both sides in 6 months, never happens in Congress, especially in this Congress, never happens with both sides come together and in a bipartisan manner passed new securities legislation. So the Jobs Act was going to change a lot of what happens, what has not been done over the course of 80 years. And so where we are now is we're getting to a point where we're going to be able to go raise money publicly without being a public company. Right until a few weeks ago, if you're trying to raise money and you put it on Facebook or you send out a tweet or something like that, that was illegal. Couldn't do it. You could go to jail. More likely you'd be fined and all of your investors would have to have their money back, which, especially if you're trying to build a company, is a real problem. And you would be then put on a blacklist from ever raising money again. So you didn't want to do that. As of a few weeks ago, you can now do it in a limited way. You can do it as long as the investors are accredited. In other words, they make more than $200,000 a year, or they have $1 million more in assets, not their house. So that's now legal. However, government entities don't move fast. The Securities Exchange Commission, the Jobs Act said, it was signed into law on April 5th of last year. The Congress said, SEC, you have until July 5th to pass the Title II rules, which is modifying 506D private placements. I won't get into all the boring acronyms, but that's the accredited crowdfunding for rich people. You have crowdfunding for rich people and then crowdfunding for everybody. Crowdfunding for rich people was supposed to be done by July 5th, 2012. The SEC said, yeah, we'll do it on our own time. And they got it done on September 23rd of 2013. Crowdfunding for everybody, like imagine Kickstarter. Everybody knows Kickstarter, right? So imagine Kickstarter, but you'd be able to give stock in your company or debt or something like that, which you can't do on Kickstarter. Kickstarter is only rewards based. You have to give away gadgets or t-shirts or love notes or whatever, and you can't actually raise money for equity on it. But that was supposed to be in place by December 31st of 2012. We expect that late 2014 or early 2015. And Congress is going crazy. Patrick McHenry, the representative that really got the Jobs Act through, calls them into congressional sessions all the time to yell at them, but the SEC is just not moving so fast. So what we have now is just the crowdfunding for rich people. Crowdfunding for everybody, where your mom can invest and whoever else, and you can raise as much money as you want, well, up to $1 million. That will be sometime soon. But you can raise money now using crowdfunding for rich people. How big is that market? Kickstarter this year will do $500 million in rewards-based crowdfunding. So they will help people, films, businesses, whatever, game projects, with $500 million. Last year, the 506D market, private placements, rich people, $1 trillion. So the economics of the market size, just the securities industry dwarfs what's happening. So what we are looking for is just an explosion of capital coming into startups and small businesses. And that's why I have my startup. my startup is a crowdfunding platform like Kickstarter, but unlike Kickstarter, it's just for people who want to raise money with securities, with equity or with debt, which Kickstarter does not do. So I'm looking at this as a $1 trillion market that we don't need a lot of in order to make a very big impact on this country. So that's the short history of the Jobs Act and where crowdfunding has come from. So, yeah,
Great.
whatever you want.
So, you want to sit down and we'll
Sure.
ask some questions? Okay. So, so I know that there have been a lot of, as you said, delays, and once SEC gets done with it, then FINRA takes over. And once FINRA takes over, then every single one of the 50 states has their say. So where is
Actually, the states don't have their say.
They don't, because of the blue skies is part of this then?
Right. It's federal law, so it's exempt from state. So as long as the broker-dealer and the reps are licensed in that state, then you don't have to have any state requirements.
Including New York, where you usually have you file a Form 99?
No, you have to file a Form D after the sales, within 15 days after the first sale of securities,
Okay.
but you're not going to have to do anything other than that.
Okay.
Unless you're trying to raise money under a state exemption, but then that's not,
Okay.
it's not crowdfunding.
Okay. So, your company, and I know that there's other companies that are also trying to do what you're doing.
Sure.
How far away are you from being able to sort of, in your mind, come and say, anybody who wants to raise something, let's come on down?
We're probably about 2 months away.
Okay.
There's two aspects. There's the regulatory aspect. We have to get all the FINRA approvals in for the kind of broker-dealer that we're operating. And then there's the software aspect. And I imagine pretty much everybody in this room has written some code. You know what it's like. Deadlines are... How do you know a software developer is lying? He's giving you a deadline. So we have a lot more code to write. Any Ruby on Rails guys in here? No? Okay. Yes.
Otherwise, you'd have a job.
Yeah.
Can you learn? Now, I've had a lot of interesting conversations about this whole space. My basic involvement is, I think we've talked about this before. I was a partner in one of the very first equity crowdfunding companies in the mid-1990s called Direct IPO. Back before the Jobs Act, back before Blue Sky funding, when you had to go to every single state, and literally every deal that we tried to do got crushed by at least one state. And it was around the time when 3 or 4 other companies tried that, and just, the lawyers just like, and yet every company that wanted to work with us, by and large, ended up becoming successful companies. So there was this huge roadblock that I know this is now making it much easier.
Well, the states, if they can make things a pain in the ass, they will. I mean, everybody knows NASDAQ. NASDAQ's the most successful stock exchange on the face of the planet. David Wheel is the vice chairman of it, good guy. He talks about the early days of NASDAQ. If you were going to list your company on it, you couldn't get approved in most of the states in the country. The states didn't like it. Why? Because it's small business. They don't like small businesses. And it took years and years and years for NASDAQ to actually become a viable exchange.
Well, it also seems that anything that's new, the tendency of government and lawyers for government, is to slow it down, because they'll never be remembered for doing something well if they're a bureaucrat. They'll remember for what they missed. PayPal, when they first started out, of course it's very mainstream now, got investigated or sued by 49 of the 50 states. And obviously you're seeing that with Bitcoin now, and even Square has gotten fines, I think they're still banned in Illinois. And then obviously, Airbnb.
Airbnb's going through nightmares currently.
Nightmares, as is Uber. Travis is a friend from the LA days when he was in his early 20s starting a Red Swoosh, and he's currently, as he likes to say, facing something like 250 years in jail on criminal offenses for violating taxi
How dare
code.
you create market efficiency?
That's right, exactly. So I'm assuming that this market, in 15 years, we're going to look back and say, what was all the fuss about?
Oh yeah.
So I'm going to ask a little bit more about the $1 trillion part, but let's start with the part of the Jobs Act that really was sort of the gist of a lot of the dreams of being able to market to anybody.
Title III.
Title III. Is that going to take 5 years, or is that going to just get bogged down in politics? And or is that going to be anywhere ever as big as the know what we're doing, ready to act, accredited investors?
Well, regulators hate change. They wish this whole thing would just go away. They wish there were only like 3 companies in the country and they could regulate them. They're very happy that IPOs have gone from 1,190 a year to less than 500 a year. Capital formation has been ratcheted down horribly in this country. The Jobs Act is trying to change that, but you have the regulators dragging their feet on issuing the rules for the market to come on, to get out there by. Now, Mary Jo White, it looks like she's committing to get Title III rules out by the end of this year, which is new information from last week. And now, the rules were written by the SEC last year, so they're just going to issue them now at the end of this year. But in their minds, this is a big leap forward. It's a forward-thinking thing. So we're probably going to get the rules at the end of this year, which means they'll go live about 9 months after. We'll finally get launched the end of next year from the SEC, but then FINRA is going to want to have their say on it. So the reality is sometime in 2015.
So I'm going to survey the audience a little bit. How many people in the audience are now or would be looking to raise money from a Jobs Act, whether it's for accredited investors or from everybody? So we've got about 20-25% of the crowd is either current or soon-to-be entrepreneurs to be tapping the public part of the market.
Yeah, if you can raise money on Kickstarter or Indiegogo or Rocket Hub or whatever, if you can raise money on a rewards-based system, in other words, if you have something to give away that people want and they'll give you money for that, do it. Your disclosures are less, your costs are less, it's a much better way to go. But if you don't, if your business model is such that you don't have crap to give away to people, or you don't have something else they want, that you actually have a real company, you're going to need to raise money with equity or debt, and then you're going to have to come onto a platform like what we're doing. But if you can do it on a rewards-based platform, do it.
Women in the audience, would you be more likely to buy stock for a woman-owned startup? Yes, no? Depends. A few big nods. But
it's what you're passionate about,
yeah.
and I don't think, if you're passionate about women-owned businesses, then
yeah.
you'll invest in that. But you may be more passionate about environmental businesses,
right.
or whatever. That's whatever your alchemy is.
Okay.
If anybody's familiar with The Alchemist, I'm making a literary reference.
Right. And geography, do you sort of see, if someone's investing in a company that, say, is a Cleveland restaurant that wants to expand to 5 other cities in Ohio, is that something then that the platform will sort of help other people in Cleveland learn about it, or is it? How does the platform going to work? Is it going to be working with a company comes in and then they have other parts of the syndicate? Why don't you explain how the platform is going to work?
Well, when a company comes in and puts their offering on the platform, which you have to publish all your disclosures, and it's extensive. It's not just your business plan or lean business model.
And sorry for interrupting, you're going to then also introduce them, if they have no idea how any of this works, to lawyers who do this.
Right. Well, we can, with a lawyer or a broker that helps do
Okay.
it. But then once that's done, they got to start promoting it. Well, they can probably do some promotion themselves to their customer lists, to friends and family, to their Twitter and Facebook accounts and things like that. But they should probably engage a PR firm. They should probably engage a marketing company. They should definitely reach out to brokers, and they should reach out specifically to media if they are niche based. If they are in a specific industry, reach out to the media industry. If you're a Christian business or a Hindu business or an LGBT business or whatever, you should reach out to media in that. You're going to need some people helping you do that, most likely.
Email lists too, will that be part of the platform?
It will not be part of the platform.
Okay.
If you want to go buy an email list, there are other iContact and things like
Okay.
that. but we will not be involved in mass marketing.
Okay.
We are the repository of that offering that we're in.
Would you perhaps have brokering other people do that as among your services?
Oh yeah. We'll have service partners that are like our
Okay.
preferred service partners.
Okay. Great. Let's see. So, do you see anything working differently in terms of how the accredited part is going to work now versus the everybody part next year? And you might want to mention that there's a very small amount of money that the average person who's maybe making 40 or 50 grand a year is able to invest.
Yeah. No matter what you do, you run a pizza shop, you run a gas station, you're going to go, I'm doing this because I enjoy it, but man, you don't want to do it because it's a pain in the ass. And doing what we do, I love this, I'm passionate about it, but complying with rules and all the regulations is a real nightmare, it's a real pain in the ass. So when it's not as much of a concern for anybody raising money, but when people want to invest in a business, if it's an accredited deal, we have to take reasonable steps. Quote, reasonable means nebulous, means that they get to give fines on it to us every so often, to ensure that the people really are accredited. Somebody isn't just lying that they're an accredited investor. And when Title III comes up in 2015, there are congressionally set caps on how much people can invest. So if you make $40,000 or less a year, you're allowed to invest up to $2,000 a year total in crowd-funded companies. If you make $100,000, you're allowed to invest $10,000. So we have to manage those caps on our side. It's not as big an issue for the people who are raising money. That's an issue for us.
And so they have to submit a tax return, or they just have to like vouch that that's their income?
Which for Title III, you don't have to do anything. You just vouch for your income.
Vouch for the income.
Title II accredited, it has to be reasonably vetted, which, yeah, if they submit a tax return, that would work. I don't see anybody doing that. Mainly it's going to be their brokers or lawyers or accountants will vouch for them.
So on the non-accredited investors, it's the honor system,
It's like a tax return, yeah.
but you're not required to. Okay, so in other words, if
You
some
sign your tax return,
Yeah.
the IRS accepts it. You sign this, we accept it.
okay, and when you're accepting it though, is that a legal document with the government, or is it just a legal document with you?
Well, it's a legal document between the investor and us,
I
which
guess
is
where
the securities.
I guess where I'm going with this is, say somebody makes, because the part that I find ironic about this is that the government's saying somebody who makes $38,000 a year, who really wants to invest in their friend's company that they think is going to be the next Facebook, cannot put $2,500 in it. Yet they can take their entire life savings and walk right down the street and put it on black at any
Yep.
casino in town,
Yep.
and that's considered just fine.
Yep,
So it is a little bit hypocritical.
Very.
But if somebody feels strongly that their college roommate or their buddy or somebody that they've met and they really saw the demo and they think this is going to be the best chance they have as a 25-year-old to become rich quickly, and they say they make 180 when they actually make 25, and they just vouch for that.
That'll
And
happen.
That'll happen.
yep.
Okay.
That'll
And there's
happen.
no penalties unless someone.
And you know what? A lot of people on their tax returns say they made 30 grand when they made 100, and they sign that and send it. That happens too. It happens.
And it's probably not going to be, because they're the ones doing the fraud,
Right.
they're not going to be able to say, if I make millions, that's great, and if not, I'm going to go back and say, oh, I didn't know, I shouldn't have been allowed, because they're the ones who did that. Okay, so I guess the honor system kind of works in
Something
that way.
that is true in most of the world that is just not, Americans have a hard time with is personal accountability. And nothing's ever your fault. It's always someone else's fault.
I remember actually in California, California has a rule on internships that you have to pay minimum wage, right? And none of the studios pay anything. In fact, some of them even have you pay. And yet, I asked somebody once, why is it that that happens? He goes, well, if they get caught and someone complains, they'll still have to pay the minimum wage. Otherwise, people want to get into Hollywood so they don't say anything. And they said, and I kind of grilled them a little bit about that, and they said, well, a lot of people drive over 55 miles an hour. Only the ones who get caught get tickets. Even though we know that most people who drive over 55 don't get caught. So I guess some of that.
Well, California, what do you call someone who's doing the speed limit? Road hazard.
Yeah.
This is true. This is true. Okay, so I'm going to turn it over to the audience in a minute or two. Any questions that I haven't asked that I should that you'd like to make points about?
Just, we're just talking about crowdfunding. You just have to realize that crowdfunding for everybody is over a year away, and there's nothing you can do about it. So don't do it because the results are not good. Do what's allowed, which is crowdfunding for rich people, and you've got to use a platform like what we're doing in order to do that.
Now, I guess one other question I'm going to ask, sort of two-parter. There's a well-developed structure that's taken several years now, because, I mean, angel networks didn't even really exist until about 10 years ago, Band of Angels. And then that sort of begot Angel List and some other folks that didn't really flush out until Naval and the Bee started that system. He was the founder of Opinions, and it really took off finally. It took a while, but within that little bubble, I mean, that's very popular. And that's a way that a lot of people go and get funded if they've got the right names and this and that. So how long do you think it'll take within other industries to be able to say, I've got a Christian products business, I know I can go on Fund America and get it funded because I've got this name and this name and this name. How long do you think that infrastructure will take by industry? A year, 2 years, 5 years?
By industry, I don't know, I guess within 8 years, people are going to look at us and say, wow, look at that overnight success. It'll take 10 years of hard work.
And I would think also that it probably, industry by industry, is going to be just like it was in Kickstarter. You get the one success, and everybody then goes running toward it.
Yep.
So if you have one company that is a restaurant that raises $10 million, every restaurant's going to want to go there. And if it's not that way in the machine shop, then the machine shop wants to go there until it's a success story in that.
Yeah, you want buzz. You want, like Pebble Watch did for Kickstarter.
Yep.
You want the buzz.
So, questions? Yes.
Yeah, question and comments, I guess, about crowdfunding. About 6 weeks ago, I applied to get on Kickstarter, and I was, I guess, in about 2 days, I was turned down. And it said you could, because of their policies had changed recently, so they said you could appeal. They didn't say why, and they said you could appeal, so I appealed. They sent me the same exact form letter back within 24 hours on email, and they didn't give me any information on why, which was, I thought was kind of rude. It doesn't tell you how you can.
They're afraid of liability. That's why they don't tell you.
Excuse me?
They're afraid of liability. That's why they don't tell you.
Well, then I went on Indiegogo, and they accepted us, and they have about 20 different categories on the left-hand side. We picked a category, and we were on basically on fashion, and they have about 10 listings on fashion. So we were on fashion for about 3 or 4 days, and then all of a sudden we were kicked off, and we were on fashion. There's about 450 listings total that you can go through to see where you are, and so we weren't on there anymore. And then you type in the city, and you list Las Vegas, and we weren't listed on Las Vegas. And then we went down all under 450 to look at it, and we weren't on there. So I emailed them a letter and say, why aren't we on there? And then they said something about a go-go factor. You have to have the go-go factor. And I said, well, what's the go-go factor? And they said, well, your friends and family, you got to get it all off of yourself. I said, well, that's kind of sounds a little ridiculous.
Well, that's the rewards based rather than the equity based.
Right.
And Indiegogo basically will take anything that's legal.
Right.
Kickstarter is becoming more and more and more judicious about sort of just having what they consider the cream of the crop. In fact, lately they've now not only, first of all, they exclude entire product categories. You cannot market a self-help book. You cannot market any kind of automotive product for some reason. And now they actually are vetting the amount that you have. So if they don't think that you can actually build the product with the amount that you're having, they will not let you on. And with Indiegogo, they'll have anything, but because of that, that means you have hundreds of thousands of folks, and their go-go factor is the ones that actually have traction. So you have to remember with these platforms, it's just a listing service. It's up to you to market it, and particularly with these rewards ones. I mean, obviously, on what Scott's is getting ready to launch. You can have professionals, brokers doing this, but it's still considered sort of a is it often a
Self-published.
self-public, it's not public, but is it a self-directed offering, or is it usually, is it considered separate if it's using a broker-dealer? Well, I guess because
It's self-published.
okay. And
Poor Kickstarter. They're this generation's MySpace.
you think so?
Oh yeah. Sorry, you're still asking a question.
Yeah, we had 5,000 likes and 20,000 hits, and we were back on for another about 3 days after I wrote the letter, and then I wrote him a letter back again and explained how do you run a business. There's only 10 listings. If you hit fashion, there's only 10 listings, only 10 people listed. Well, why wouldn't they, even if up at the bottom of the list and there's 30, why wouldn't they at least list you? Because the more people that they list, you're going to get some traction, you're going to make money. 'cause they're making
Indiegogo
commission.
needs to see you get to
Didn't make any
30%
sense.
funding in a very short time, or
See
they
that?
know, Indiegogo wants to see you get to 30% funding in a very short time. If you don't, they know you're not going to be successful with the offering, so they
There's no way to find you, even if you list them, if they listed you under the city, it would at least have something on there, because they told us that you can go under search and type in your exact name of your company, but who's gonna know who that is? So it just didn't seem it was like it was a smart way to do it. They could list you as a number of 2,000, each and maybe. Anyway.
Well, Scott had mentioned they basically want to show the ones that are having traction, because if they just sort of do it alphabetically or something, you're going to see a lot of ones that are 0, 0, 0, 0, and people won't search. So they show the most successful ones first. Yes. No, you and your hand up.
So we have a project that it's kind of market disruptor, we feel, but it's technology based. It's not an innovation in the sense of new technology, but implementation of existing. And we're concerned that if we go to crowdfunding platforms, that we're going to be buried for one of the big guys by basically bringing the idea or how we're going to approach the problem, or how we're solving the problem, basically. Do you have any advice on that, or do we have to wait for you guys to come around and?
if you need to go equity, there are not a lot of options yet. They just don't exist. What's the industry?
It's e-commerce.
Yeah, I wouldn't. There's not much out there yet. AngelList would probably be
Yeah.
your only option.
If you have a secret sauce that you only want to show to select number of investors, then crowdfunding's not for you, because you're trying to protect your
The
IP.
concept is pretty simple, but in order, like, we approach a few angel investors, but we actually solving 4 different problems at the same time, and usually people only see one aspect of it. It's very hard for them to grasp, unless you've been in different industries that they would solve for. And then we kind of hit a wall with that, or we need to raise a lot of money. A small amount of money won't help us, and that's why we're looking at, like a goal is raised $200,000 or more in a very short amount of time, and that would allow us to move pretty fast. But we would burn through that in a matter of 3-4 weeks.
I've got a sort of follow-up question. What do you see as being, when you have, say, hundreds of offerings, the factors that are going to get your deals funded the fastest, get them to 30% in a period of time? And do you see them as being 30-day deals, or do you see them as being year-long offerings?
We only allow a maximum of 6 months.
Okay.
It's how strong is the offer? What are you offering investors? What's the deal?
Right.
How well you've crafted your pitch, described the company. Is it engaging? Are your graphics engaging? And then how good you are at networking, how good you are at talking to media, and how good you are at talking to brokers and getting them to help sell you.
Okay. That's helpful? Yes.
At what stage my startup company should be before I come to you for capital?
You can raise capital at any stage, but you need to understand yourself. There are 3 things you need to do. If you're going to raise capital, you got to look in the mirror and you got to be honest. You need 3 things. 1, what's your value proposition? Does your company have a strong value proposition to your intended market? Are people going to want it? And then, what's your revenue model? If they may want it, are they going to pay for it? How are you going to make money? You can't say, we're going to get really popular and then we'll figure out a way to make money.
The Twitters of the world that do that are 1 in a trillion. You can't do it.
Assuming
So-
I have those 3 things,
The third thing is the team. You've got to have the team. If you have those 3
Yeah.
things, you can generally get some funding, even if it's just angel funding, at any stage, even if it's just the start. But preferably, you want to get to a point where you at least have a product, an MVP, minimal viable product.
but do I need to have X number of customers?
No, you don't need revenue. You just need to show something.
I don't need satisfied customers or some demo
That
or...
helps. That helps. But you may not be able to get to that point. You may need capital first. So if you at least have something to show people, then it should be good.
Yeah.
For this business, I've raised 1.6 million so far, and it's been on the strength of my business plan, my team, and really the HTML screenshots I have. We don't even have our product finished yet, and I've raised 1.6. So you can get there if you have the right thing.
I have all that, where should I go?
That's the trick. That was our original name was Arctic Island, because when your bank turns you down, the world looks like an Arctic wasteland. You don't know where to go get money, and we're an island. Our go-to-market brand is Fund America, but
And in 2 months, you'll be able to go there.
in 2 months you'll be able to go there.
Private equity was KKR, they did LBOs. It's changed a lot. I'm familiar with some private equity deals where they actually funded startups, no revenues. I'm just curious where you see PE going along. VCs are perhaps losing a little luster. You got crowdfunding coming along. What's your forecast for PEs in the
Well,
global?
PE generally chases larger deals, and
Generally, but-
where the exception to that you're seeing now is where they're putting some pools of money behind incubators. And so what they'll do is they'll help fund or partially fund some of the people coming out of the incubators. It would be pretty exceptional where PE would help a startup that wasn't incubated or wasn't from some kind of a name. I don't think you'd see that.
I could tell you a story.
Yeah, I mean, it would be exceptional.
It's not even technology. Yeah.
Do you see incubators going to equity crowdfunding to get funded as well?
Oh God, that's all they can do. Yeah.
Okay. All right, we got,
Less than 7% of Y Combinator graduates get venture funded. That means 93% are looking for cash.
interesting. And that's the most successful one.
Yeah.
So, same one.
We're building an incubator here for next year, so but one of the things I want to ask you based on your experience is regarding the capital gains exemption that was in the Jobs Act. Do you think they're going to extend it for next year?
The SEC was supposed to issue rules in 2012 for all this stuff, so predicting what they're going to do next year on some of the things like that, I really don't know. You know, I believe that given the state of the economy, it's still fragile. They'll probably extend it, but we won't know until we
They
get
can
there.
also retroactively extend it. They just did that with the QSBS laws, that, the small business exemption. That expired at the end of 2011. They did not renew for 2012. They just renewed at the start of 2013, midway through the year, and then made it retroactive back to 2012. So now it expires again at the end of this year. So one more question? Anybody? Yes.
Just to clarify your business model, because we've always been able to approach known or suspected accredited investors directly.
If you have a pre-existing relationship, you're allowed to.
So your model is they're gonna due diligence our deal, and then you're gonna go shop it for investors.
Well, or brokers
That's what
will.
makes it public.
You'll also be able to promote it yourself to people that you don't know, which was illegal.
But you're not gonna work from a pre-screened pool of accredited.
That is not our model. Our model is anybody, as long as the business is lawful. There are a few things that we don't take. We don't take art projects. We don't take adult industry projects. We don't take a few other things. But as long as it's legal, then you can list it on the
So
platform.
how do you shop it?
We don't shop. What we do is we go out to different investor groups and get them to use our platform to look for deals. We try to get commitments from organizations that they'll invest a certain amount of money. But a lot of it is, we're like Craigslist. We're a place where you can legally list your offering, but then a lot of the promotion is going to fall onto you and your network in getting it out there. We will bring eyes to the platform, but we won't shop someone's specific deal. But we'll create tools and ways for the people to do that, for you to do that.
So just what I'm trying to get is what brings it under the Title II public solicitation is the fact that we could then go out and shop it while you're.
Right, as long as it's hosted on the platform and all the disclosures are there. We have to vet all the disclosures, that do some due diligence.
Okay, I'd like to thank Scott. This is his second presentation.